On today's episode, we are going to take a look at two SPACs that are merging with some crazy companies. And the best part is that their stock price is not overextended compared to their nominal value like most of these other SPACs right now. The first one is one that's positioned very well for the smart car marketplace. They already have partnerships with like BMW groups, with Toyota and Nissan, and much more. The second company we're going to take a look at is one that's trying to transform the way education is working and moving it to the online world. If this is your first time here, don't forget to hit the subscribe button, the thumbs up, and let me know in the comments which market are you more bullish on, the educational market or the smart car marketplace. So let's get started. The first company we're going to take a look at is Otonomo, and they are merging with software acquisition group number 2, ticker SAII. Right now, the current stock price is sitting at about $11. So it's not too far off from that $10 stock price, where some of these SPAC companies, right, that we've been seeing are already sitting at $18, $19, $20 pre-merger. So first, let's take a look at what Otonomo does. So Otonomo is pretty much a data platform. The data that they hold is smart car data from everything like fueling, EV charging, how consumers are driving, health of the vehicle. So they collect this data and then they sell it to their consumers. So the first thing we have to ask is, how do they collect this data? And they collect this data with partnerships through OEMs. So some of the OEMs that they have, for example, partnered with are Ford, Kia, Toyota, BMW Group, which includes BMW, Mini Coopers, Rolls-Royce. They also have Nissan, Mitsubishi, and others. So OEMs have this partnership with Otonomo that, hey, we give you our data, and then this data you sell to your consumers, and we also keep a share of it. So now you might ask, Jose, why are these OEMs partnered up with Otonomo? Why don't they just sell these data points individually and kind of cut out the middleman and keep all the revenue? And that answer is pretty simple, right? Because if all these OEMs were to do it individually, it would cost them a lot more money. For every partnership or for every deal that they would do, it would cost them an X amount on legal fees. It would cost them X amount of time. And sometimes some of these deals that Otonomo will be doing are super small, that it's not worth it for example, Ford or Kia or Toyota to do it individually. So the perfect example will be like, they are the eBay of data points, right? Or the Amazon of data points. You have your sellers, and then you also have your consumers who want to buy that data point. There is a second revenue stream that Otonomo wants to get into, and it's one that they provide a form of SaaS or a software as a service to their OEM partnerships or to their consumers. Right? Data needs to be secure. Data needs to be unanimous, and it needs to be handled in a certain way. For all these types of companies, both the consumers and the OEMs, they need to have some form of backup system with it. So Otonomo provides that software that allows them to securely handle that data, securely transfer that data, and securely use that data. So they also provide that to their consumers and their OEM partners. So they have, for example, direct consumers, what could be ChargePoint, like I mentioned in the EV. Hey, I want to see how often EV vehicles are being charged and what might be a good location for me to put my vehicle in, to put my charge point at. Other ones could be Continental, the tire company, Avis Budget Group, to try to understand their fleet. They also have indirect consumers. There's a lot of data companies, for example, LeasePlan, Versic, Amazon, Microsoft. These are all companies that provide data to other consumers. So indirectly, they can sell to them. And then, for example, Microsoft can go sell off that data in some form of platform that they have to AT&T, to Coca-Cola, or some other people that have some crazy amount of fleets. Some of the strategic investors for Otonomo are Avis Budget, Dell, and Nissan Mitsubishi. They also have some others. And some tech partners right now are Amazon, Microsoft, and Salesforce. So if we take a quick look at the numbers, at a $10 stock price, this gives Otonomo a valuation of $1.4 billion, and they have about $300 million in cash, so it gives them an enterprise value of about $1.1 billion. They did give some commentary that with this type of funding, they will be fully funded for the next 5 years. As of right now, the company will also have no debt. But what are you getting for a $1.4 billion valuation? So overall, the market they're hitting is pretty cool. But it is important to note that right now in 2021, they are not collecting any revenue. They expect by the end of 2025 to have a $574 million revenue. So right now they're selling about 3 times revenue of 2025. So if one is to invest in this, it's definitely going to be one of those startup phase companies. The company is not expected to be gross profitable until 2022, and they're not expected to be EBITDA profitable until 2024. So many people might ask, Jose, why are you taking a look at Otonomo if it has no revenue? One thing as an investor, I like to see are future potentials. Where can I see this company going, right? So Otonomo obviously hitting the data marketplace for smart cars. I believe that in itself is huge growth. Every car we're having now has all these smart sensors. And I truly believe data is king when it comes to autonomous driving. And right now, I do believe that a lot of the OEMs are very far behind in the autonomous driving data collection. So for some of these OEMs to make it into this autonomous and kind of be some of the leaders, I do believe they're gonna have to work together. And I do believe Otonomo is gonna help that out. And I do believe the EV market is gonna be a huge growth for Otonomo. But when things start to go into self-driving mode, autonomous driving, Otonomo will also be able to help out in that market. So that is probably the main reason I am willing to add Otonomo into my watch list. So the second company we're going to take a look at is Nerdy. They are trying to personalize learning in just a click away. They do things like online learning, classes, test prep, and many more. They are the parent company of Varsity Tutors, which is one of the leading platforms for live online tutoring courses. They do everything from one-on-one personal instructions, adaptive self-study, small group classes, and large group classes. And this is going to go public via a SPAC called PACE, ticker PACE, TPG Pace Tech Opportunities Corp. Right now is sitting at $12.18. So now let's try to understand their monetization model. So they have 2 things. They have a free service and they also have a paid service. The free service is, for example, your adaptive self-study, where you just want to help yourself improve to be a better studier. They also have large group classes and they have about 500,000 active members right now. Then they have the paid service. The paid service is meant for one-on-one education or small group classes. These small group classes are about like 7 to 15, your typical classes at, for example, a physical school. Nerdy believes that those free users will eventually move on to their paid service once they become comfortable with their services. If we take a look at their audience breakout, we can see they're hitting the whole educational world. 25% is about K-8, 32% is the high school age, 31%, and I do believe that's actually pretty high, is the college grad, and 12% is the professional market. And this is also working, for example, like a marketplace. Let's say you want to be a tutor. Let's say you want to teach a class and make some money out of it. You can go here at Varsity Tutors, start a class. Obviously, you're going to pay some form of fee to Varsity Tutors for using their platform. So they just reported Q3, and for Q4, they are still expecting strong growth. They're expecting about 87% online revenue growth, 59% online paid active growth, 169% paid online session growth, and about 68% gross margins. From 2018 to 2023, they expect a 45% compounded annual growth rate. So this is a company growing at crazy levels. Their most recent quarter, Q3, they saw about 71% year-over-year growth. One of my favorite things about Nerdy, I want to say, is this artificial intelligence for human interaction. And this is a crazy name. What if you're a gamer, what this is pretty much is a matchmaking kind of setup. If you guys play games, you know, when you join a game and you're playing a ranked game, you kind of get matched up with people in your similar style, in your similar rank. So Nerdy kind of uses that similar application. They collect multiple data from both the students and the teachers and try to find the perfect combination. Hey, this student is more of an introvert with low motivation, and this teacher is usually very good with those type of students. That allows to have strong customer relations, and with strong customer relations, it allows people to continue to use that platform over and over again, and then the more they use it, the more data points they collect, and the better this matchmaking skill also involves. So now the stock price of $10, Nerdy would be worth $1.7 billion. Right now it's up in 20%. So it's closer to about $2.2 billion right now. But at that $1.7 billion valuation, that is 7.1 times their 2022 forecasted revenue, right? This is not, I wouldn't call this a startup phase company like the first one we saw. This is revenue next year or 2 years from now. And after this merger, the company will have no debt whatsoever and will have a very strong balance sheet. So now my thoughts. Nerdy is very different from Otonomo, right? Completely different market, but they are in different phases in their business. Where Otonomo was more a startup phase, Nerdy has already had the wheel spinning. They're already collecting revenue and they're already seeing huge revenue growth. So that would probably be a good play for me if I wanted to get into the educational realm with a company seeing huge growth. Where Otonomo is more a startup phase company, right? Like we mentioned, but the marketplace that they're in is one that I can see huge potential, mainly in that autonomous market and the EV market segment. So let me know in the comments which one was your favorite. And take care, guys. Have a good night and see you next time.